Hey everyone and welcome back to the channel. Today we are diving into some important updates on GST that would affect anyone who uses hotel and restaurant services. And if you are in the hotel, restaurant or catering business, this is information that you definitely need to know. Have you ever been a bit puzzled by the GST on your hotel or restaurant bill? Well, the rules are getting changed. Or if you are a hotel or restaurant owner, get ready because how you handle your GST is getting an update. So in today's video, we'll break down the upcoming changes to the goods and services tax GST specifically for hotel accommodation, restaurant and catering services. We'll explain what's changing, how it might affect your expenses as a consumer and what businesses need to do to stay compliant. We'll cover it all, so let's dive in. First, let's get to know the difference between hotels and restaurants. Hotels primarily provide accommodation or lodging services like Taj, Holiday Inn, Shangri-La, while restaurants primarily focus on food and beverage services, be it MTR, Domino's, Barbecue Nation, and so on. These restaurants can be located either within the hotel premises or outside the hotel premises, better known as standalone restaurants. Before we jump into the changes, let's learn a few basic terms used in the hotel business relevant for today's video, starting with declared tariff. In hotel industry, declared tariff is essentially the hotel's declared price for the room. It also includes charges for the amenities provided as part of the room that you rent, like furniture, aircon, refrigerator, and so on. But this does not include the discount that the hotel offers. For instance, let's say rent for a room with AC, furniture and refrigerator is 8K per night and the hotel offers 10% discount. The room rent that you pay after discount is 7.2K and declared tariff here is 8K. Now, why is this term declared tariff relevant? To answer this, let's learn about specified premises. Up until 31st March 2025, hotels having declared tariff for any room more than 7.5K per room per night were specified premises. Now, if you are wondering why we're talking about this term specified premises, because this is the basis for topic of today's video. And one of the changes that we are discussing today is linked to this term specified premises. So what's the change? From 1st April 2025 onwards, declared tariff has been replaced with value of supply, that is actual room tariff. So now specified premises means hotels having actual room tariff more than 7.5K per room per night during the preceding financial year. For instance, in FY25, if the actual room tariff for any room in a particular hotel is say 8K, then such a hotel is a specified premises for FY26. Not just this, even hotels having actual room tariff within this threshold, that is up to 7.5K, can also now voluntarily choose to be specified premises. Then we have new registrants, that is if you are newly starting your hotel business, then at the time of GST registration itself, you can choose to be specified premises. So from 1st April 2025 onwards, all these three categories will be specified premises. Next, do you have to do anything to choose to be specified premises? We'll talk about this in a bit, but now let's understand what's the use if you are a specified premises. This is when understanding GST on restaurant services becomes crucial, whether you run your own restaurant in your hotel or outsource to others who operate restaurants within your hotel premises, or you let outdoor caterers offer their services within your hotel as part of any event, say wedding, conference and the like. This is because change in the definition of specified premises that we have just learned is directly going to impact GST on restaurant services provided within this so-called specified premises. So from 1st April 2025 onwards, if you offer restaurant services within specified premises, you will have to charge 18% GST and you can avail input tax credit ITC. But if you offer services outside specified premises or if you are a standalone restaurant, then you will have to charge only 5% GST but no ITC. Remember, there's no change in the GST rate as such on restaurant services. Just like earlier, even now, GST rate is linked to the term specified premises. But the meaning of the term specified services has undergone a change and now its scope is further expanded. To understand this better, let's consider a scenario. Let's say you offer restaurant services in specified premises, say Lalit Ashok. Then you'll have to charge 18% GST and you can avail ITC on your operational expenses. But if the place of your restaurant is not within specified premises, say the park, and for some reason the hotel didn't choose to be specified premises, though it seems unlikely, or if you operate a standalone restaurant like Rameshwaram Cafe, then you need to charge only 5% GST, but you cannot avail ITC. Now, what do these changes mean for consumers like you and me? To understand this, let's consider the same scenario. Let's say you dine at a fancy restaurant inside Lalit Ashok. Rooms in Lalit Ashok generally cost more than 7.5k a night, so it is a specified premises, so your food bill will have 18% GST. But if you eat at a restaurant located outside specified premises, from our scenario, the park or the standalone restaurant like Rameshwaram Cafe, then GST will be only 5%. Now, instead of restaurant services, if you offer catering services, then what's the change for you? Now, the concept that we have just discussed for restaurant services is gonna equally apply to catering services as well. That is, if you offer catering services within specified premises, you'll have to charge 18% GST and you can avail ITC. But if you offer this outside specified premises, then only 5% GST, but you can't avail ITC. Now we are clear that the GST on restaurant or catering services also depends on hotel's decision to be or not to be specified premises. And remember, this decision has to be taken only by hotels, not by restaurants or caterers supplying within specified premises. And the next question would be, being a hotel, if you want to choose to be specified premises, or rather if you want to opt in to be specified premises, then what do you have to do? This depends on the category of specified premises you fall in. First, we have hotels having room tariff more than 7.5k during the preceding financial year. Such hotels would be automatically considered as specified premises. You don't have to specifically do anything to opt in. Then the next category, that is hotels where room tariff is within this threshold, that is up to 7.5k. And if you choose to be specified premises, then you'll have to specifically opt in. You can do this by filing declaration in Annexure 7. This has to be filed between 1st Jan and 31st March of the preceding financial year. For instance, for FY27, to opt in, you have to file Annexure 7 between 1st Jan and 31st March 2026. But for some reasons, if you don't choose to be specified premises, then don't file this declaration. Then the third category, new registrants. Such hotels have to file declaration in Annexure 8. And this declaration has to be filed within 15 days of obtaining ARN, application reference number. Now, ARN is the acknowledgement that you get when you apply for GST registration. For instance, let's say you apply for GST registration on 1st April 2025. ARN is generated on 7th April 2025. So you'll have to file Annexure 8 within 15 days of ARN. And according to FAQs released by CBIC, deadline in this scenario would end on 21st April 2025. Now let's talk about opt-out. You opt in when you choose to be specified premises. On the same lines, you opt out when you don't want to be specified premises. So when can you opt out? Let's understand this with a simple scenario. Let's say for FY26 you opted in. During the same year, that is FY26, let's say actual room tariff never exceeded the threshold of 7.5k. So for the next year, that is FY27, you have an option to opt out. Bearing this threshold in mind, you can keep doing this for every financial year. Now, how to opt out? This is very similar to opt-in, but to opt out, you'll have to file declaration in Annexure 9, and this has to be filed between 1st Jan and 31st March of the preceding financial year. For instance, to opt out for FY28, you need to file Annexure 9 between 1st Jan and 31st March 2027. Whenever you opt in or opt out, you need to remember two key things. One, whether you are a new or an existing hotel, once you opt in, you can't opt out during the same financial year. Similarly, once you opt out, you can't opt in during the same financial year. Two, once you opt in, the declaration is valid till you opt out. Similarly, once you opt out, the declaration is valid till you opt in. To put it differently, you don't have to file this declaration every year. If you run multiple hotel premises under single GST registration, say in the same state, Karnataka, then you'll have to file separate declarations for each of the premises. Depending upon the threshold, you're free to choose between specified and not specified premises. Surprisingly, you can't file declaration online yet. Until it's online, you'll have to email or post the declaration. Alternatively, you can physically submit the declaration in GST office in your jurisdiction. Ensure that you get an acknowledgement. And you can download these declarations from CBIC website. You can find the link in the description. To summarize, 1. These changes help hotels, in turn restaurants, choose between 18% and 5% GST. Now, what to choose? One decision criterion could be to look at the net GST after adjusting ITC. If this is significantly less than 5%, then better to choose 18%, otherwise go for 5%. Do cost benefit analysis and choose what's best for you, at least from next financial year onwards, because the deadline for this year is already over. 2. Remember these changes, and especially for hotels, ensure you understand the declaration process and meet those deadlines to stay compliant. Lastly, for consumers, just be aware that your dining bills will reflect these changes, especially at hotels with higher room rates. Whether this change is gonna slash your food bill or you end up paying more, time will have to tell us. With this, let's wrap this episode up. Hope it was informative. Thank you for watching.